If I told you there was a near production zinc and lead mine in Canada with approximately $400 million of infrastructure already built, with robust project economics, with significant exploration upside, and only one permit remaining before a restart decision, you'd probably think the market would be paying close attention. Well, that project is our Scotia Mine, and today I'd like to show you why we're so excited about its future. Hello everyone, and welcome back to the EDM Mining Journal. Today I want to step back from our individual news releases and give you the bigger picture, and why we believe the Scotia Mine is one of the most compelling near-term zinc restart stories in North America. What makes the Scotia Mine unique is that this isn't a greenfields project. The mine has operated before. We are not starting from scratch. We already have an open pit. We have the mill behind me, you can see. We have the tailings facility, we have roads, power, water, we have workshops, warehouses, and of course all the supporting infrastructure behind that. The replacement value of this infrastructure today, we estimate to be around $400 million Canadian. That's an enormous advantage. Building a mine from the ground up today can take hundreds of millions of dollars and many years. Much of that work has already been completed here at the Scotia Mine. Our 2021 pre-feasibility study demonstrated very robust economics. The project generates a pre-tax net present value of approximately $174 million Canadian, with a 26% internal rate of return and a payback of just under 1.5 years. And of course that's with initial capital of about $31 million Canadian. So those are very strong numbers. In fact, the Scotia Mine's economics remain resilient even under lower metal prices and higher capital cost assumptions. That's important because it demonstrates the strength of the project. Another thing that really excites us about the Scotia Mine is its position on the global zinc cost curve. According to our studies, the Scotia Mine is forecast to sit in about the 25th percentile of global zinc producers. Why? It's because we already have this infrastructure in place. That makes a huge difference because our haul distances are short, and also because much of our waste material is free digging. That, added to our valuable gypsum byproduct credits, all contributes to having factors that will keep our costs low. One of the biggest milestones for the company has been permitting. Over the past several years, we've completed species at risk studies, groundwater studies, surface water studies, habitat assessments, fish studies, and of course extensive environmental work. Today, the Scotia Mine is only one major permit away from a production decision. Our Fisheries Act authorisation application has been deemed complete and has entered into formal review. This is a major milestone for the company and brings us one step closer to a restart of the Scotia Mine. Now, while we've been advancing the permitting side of the Scotia Mine, we've also been improving the project itself. Recently, we announced a very encouraging dense media separation study. Those test results demonstrated an 18% increase in zinc feed head grades, a 30% increase in lead feed head grades, and of course the potential to reduce waste processing by up to 25%. So what does that mean? That means higher grades, lower costs, potentially higher concentrate production in the mill, and ultimately better economics for the project. The footage you're watching now is from our pilot plant testing at SGS Laboratories. These tests simulate what a full-scale DMS operation could look like here at the Scotia Mine. The results were, of course, extremely encouraging. And the surprises just didn't stop there. Recently, we announced some very interesting gold assay results when we analysed the concentrate samples from previous operations. We discovered gold grades of 2.93 grams a tonne in the zinc concentrate and up to 142 grams a tonne in the lead concentrate. Naturally, we repeated this process and we got repeats of as high as 157 grams a tonne. So these results are very exciting. Why? Because additional precious metal credits have the potential to improve the project economics even further. So as a result, we're undertaking additional work to better understand the gold potential here at the Scotia Mine. The Scotia Mine also has considerable exploration upside. We know the deposit remains open along strike and at depth, and we have several highly prospective exploration targets around the property. We've also commenced our first phase gold exploration program, so the story here isn't simply about restarting an existing zinc and lead mine, it's also about creating additional value through exploration and development success. That's EDM, explore, develop and mine. The timing for the Scotia Mine may also be excellent. Our industry forecast suggests that global zinc demand could exceed supply by approximately 3 million tonnes by 2031. That could create a structural zinc deficit. So for a near-term restart, the opportunities in a Tier 1 jurisdiction make us well positioned to benefit from this market environment. So despite all of this progress, the market continues to value EDM at only a fraction of many of our peers. And that's why we remain so excited. We believe that by permitting, updated resource estimate, the updated PFS, improved economics, gold upside, exploration success, and of course ultimately a production decision, all have the potential to create substantial value for our shareholders. This mill has produced concentrates before, the infrastructure is here, the permits are nearly complete. The economics are strong and new opportunities continue to emerge. At EDM, we're building something very exciting here at the Scotia Mine, and we look forward to sharing that journey with you. So, thank you for watching. If you enjoyed this update, please don't forget to like, subscribe to the EDM Mining Journal and hit that bell icon so you don't miss any future updates. Thanks for watching.